Hey, good afternoon, everybody. This is Dave and Doc with 12-Minute Trading. Today is Monday, the 9th of January. Welcome to the new year of 2023. And again, my name's Doc Severson. Next to me here is Dave Lukas with 12-Minute Trading. And we're part of 12minutetrading.com. And you have found our live stream where we go over the what we see and happening in the market. Lots going on in the market, not only last week, but also today. We're seeing lots of movement, lots of potential for things. Dave, welcome aboard, and good to see you in 2023.
Good to see you too, man. And it's great to be on with all of you out there. So what we got going on, if you've been following the channel a little bit, I've been doing these little shorts, just kind of updating on the market energy release. Now, remember, Doc and I, part of a small group that created this kind of really unique really energy indicator. We call it the fractal energy indicator that allows us to track the ability of a chart to trend. So it doesn't tell us which way it's going to go. It just tells us if a chart is charged up and ready to run, or if it's exhausted and it's done trending, right? And so coming into the end of last week, we were talking about how this daily chart had this massive amount of energy. In fact, the largest amount of energy that we've seen fully charged up in the last year. And that started to release as of Friday, and that's continued into today. But in the afternoon, we started to see some softness, right? So is it just a fake out, right? Are we just, popping up and we're going to go the other way, or is this going to continue? And I want to show a few things on my screen, Doc. I'm going to take over control, and I just want to show, I like to look at things from the inside out from the markets, right? So right here, this is the 1 minute, 1 day chart, right? And so you can see right now we are, we hit our high of the day up here. We are up, 50 points or so on the S&P. And we've been slowly, steadily since the Fed speakers came out. I think Daly speaking and Boston speaking, just kind of slowly bleeding it down for the day, right? So does this mean that, hey, that was it and it's over, or is it something where, it's something else? And so that's why I like to look at things from the inside out, because I can go to my next time frame that I like to look at, and that's the 5-day, 5-minute chart. And I can say, okay, so what happened here, right? This is my energy line down here. See where I was fully charged here? Anytime we're in the 60 range, anytime below this 25 range, right? These are the levels. So 60 is fully charged, down in this area is exhausted. And so I saw this level up here and I saw us fully charged. I said, okay, we're fully charged. Are we going to break and go back, continue higher like we did on Friday? Or are we going to break down from here? And we broke down. See that energy released. And then we charged back up a little bit, and then we gave it away. This is when one of the Fed speakers really started to talk about, I believe they were saying that they expected rates to be kept into 2024 at these levels. And so now we've kind of had this time, we consolidated, that charged things back up. And so we've gone nowhere for the better part of a little over an hour or so. And so that's where we're at, and we're getting charged back up. So we haven't released this energy yet. This will get up into this range and then release. So which way is that going to go? Well, now we go to the next time frame, and I like the 5-day, 15-minute time frame. So this shows me what's going on overall. And so you can see we had this up into here, and this was where the release happened. There's where that Fed speaker came out, right? And we released, but now we're getting to the lower end of this. We're leveling off here. It doesn't always have to go down here. You can see we level off a lot of times in this range. And we're also butting up against the Bollinger Bands. And the Bollinger Bands, I always say, act like the ropes of a boxing ring, right? You can hit against them. They keep you in it, but they throw you back in. And so we're hitting a level on the 15-minute chart that this could end up being support right here and a turnaround point, because the best way to charge this chart back up is to turn around and go right back the other way, which it came, and that would charge us back up. So that tells me we may be at a point where we're just leveling off here, consolidating, getting to the end of the day into that 3 o'clock hour, and then getting ready to run back higher. But I go to a couple more time frames, 10-day, 30-minute. Now I understand now why we pulled back, because we were exhausted on the 30-minute chart. These are all 30-minute ticks. So what have we done for the last couple hours, right? We've been charging this thing back up. Remember, this was a big move, burning out all this energy, and now we're giving some back to charge it back up, but we're also coming up to a point of supporter right here around this moving average. Last time frame for you guys, 10-day, 1 hour, still on the floor, right? So what that tells me is that, yeah, we can come back and head back up in here, but it's going to take a day or so to get this thing charged back up. Unless it really drops fast, then that'll charge it back up. Now, the one thing that could do that is that Powell speaks tomorrow before market open overseas. So if Powell comes out and is like incredibly hawkish, then that could do it. So that's my analysis right now. Doc, I'd love to hear what you're thinking, but when I look at things through into today, looking it into tomorrow, I think we're kind of stuck in a little bit of a range with Powell maybe breaking us either way at this point.
That's interesting. So what I'm going to do is I'm going to go, so Dave's going inside out kind of. I'm going to go outside back in with what I'm looking at. Let's see if I can bring this up.
And
here.
Obviously, I'm more short term right now. It's important for long term. So I'm really glad you're covering this.
So what we have to figure out here, and let me go out to the weekly chart because I want to show you guys the opportunity that is out there right now. So again, this is the S&P 500. And what we're looking at here is looking at this big series of lower highs, lower lows, lower highs, and lower lows, right? It looks really simple when you look at it this way. And this is why we like to zoom out and look at things from a distance. In this case, like a weekly or even a monthly chart sometimes is very instructive. So we had a nice rally coming from the beginning of October all the way up into the latter part of December, right, in 2022. And then we pulled back really hard based on some more hawkish behavior from Fed meetings and everything like that. We're used to it by now. So I think what everybody is expecting is for the price to start heading down like this. This is where everybody's mindset is. Everybody is bearish, right? You can't go anywhere without tripping over a bear these days because that's just where things are at. Because, every time I go on CNBC or Fox Business or anything like that, everybody's like, 2023 is going to be terrible. And I agree with everything that they say, but the market doesn't necessarily move in ways like that. So what I'm always looking for is what is the destination? What is the direction the market will have to move to generate the greatest amount of pain that's out there? And to me, it might be this way, like this. If we put in a higher low like this and break higher from here, that would be a massive move. That would be catch a lot of people by surprise, and we'd see a heck of a squeeze. Now, we started to do that on Friday. We started that process on Friday. So let's move down to the daily chart from there and see that process here. This big energy squeeze from this point, breaking out to the upside. Now, is it actually going to do anything here, or are we going to have another one of these lower highs that leads everybody on the wrong side? We've seen so many of these lower highs that just catches everybody off guard and leads to a big distribution move to the downside. So that's really, I think by the end of this week, we'll understand with Thursday's CPI, with tomorrow's Powell speech, as well as just all the other Fed speak. And we didn't even have that Fed speak. The Fed speak that you talked about wasn't even on the schedule. So there's lots more to come, I'm sure, because we had really kind of a quiet period there for a number of weeks. We had a quiet period from the Fed because over the holidays they didn't talk at all, which was blessed relief for these guys. But
based on the daily chart that you had there, I think everybody saw that like huge. You pull back up, it was at the highest level in over a year for the charge, and then you can see with Friday's move, even into today, it's going straight down. So it's releasing very fast, and so I do think this is a move upward. I think CPI has been trending down, so I think we're going to get a lower number with that just by the nature, because you're comparing year over year at this point. So you're comparing higher CPI to call it higher CPI. You're not getting much of a gain in CPI. So I think it's pretty easy to see inflation going down by that logic, maybe flawed, but it's showing lower logic. So you can see the release happening on that. These releases on a daily chart typically happen 5, 7, maybe 10 trading days, and then they're done. So we're 2 days into it. I saw some news about Fed or Fed Powell chair speaking tomorrow, and actually talking about how things are slowing down, which would be somewhat dovish. So I would not be surprised to see this thing take that full energy out, continue to run higher. One of the things I said, I think in one of these sessions in mid-December before we took our break, was I wouldn't be surprised to see the year we take off out of the gate upward, we get everybody on board, and then after that Fed meeting at the end of January into February, that's when some selling begins. And if we're going to maybe go to new lows at that point, maybe recession, whatever, self-fulfilling prophecy that all the pundits are kind of ushering in happens, and then that's where the rug gets pulled out. So for me, this looks like this thing's going to go the distance, and it's going to definitely have a little trouble, maybe around 4,000. But I think upper end of this is that 4,100, 4,150 if it wants to really bleed out all that daily energy.
So here's what I'm going to tell people that are online. And so, by the way, appreciate you guys checking us out live, and although probably most of the people that are going to watch this are going to watch this on a replay. So wherever you are, whenever you're watching this, thank you for tuning in, and make sure that you get subscribed. So here's kind of the bottom line I'm going to talk about in terms of what we call Darvas boxes. So this guy named Nicholas Darvas he was a professional dancer. This is back in, I don't know, the 1950s or something like that. And he used to travel the world, and he would do trading based on cables. It wasn't even, it was old cable style things. It wasn't even email or anything like that. And he did great because all he did was he set up decision boxes like this, and he would say, well, I'm going to be long above this level, and I'm going to be short below that level. So if we see the price break 4,000, this is on the ES right now, but it's going to be fairly close with the SPX as well too. But if we see it break above this confluence of resistance, which is this trend line, as well as the green line, which is the 200-day moving average, that's going to be extremely powerful to see a breakout above there. So that would be a break above 4,000 on the ES. It's going to be very similar to that on the SPX. But on the other side of that, a break back below into 3,900 and below would be extremely bearish, because what that would show would be another lower high, and you'd have a lot of very weak hand bulls that are going to be scrambling to get out. And that led to all of these moves very similar to that all the way back here. So watch what happens this week. I think this week is going to be absolutely key towards what happens in the first quarter of this year. Either we get a breakout above there, we get a short squeeze up to some level up there, and then, like what Dave talked about, we'll see whether or not the market can handle that altitude, or are we going to fall back into the pattern? I think if we fall back into this pattern, that would be extremely bearish, and I would expect to see maybe at the very worst, I guess the best case scenario would be a fill of this gap, and it could be worse than that. It could be down below 3,500. So a lot of people looking for that move, which is why I agree with Dave. I think that the path of least resistance that people are not looking for is the breakout to the upside, which is why it might happen.
Yeah, the market will typically bring the most amount of pain to traders as it can. So again, but it could be short-lived, and then you just roll over from there. So that's just kind of where we're at. I think short-term, we're still, through this week, I think we still see the upside going. That 4,000 level is going to be absolutely key. We'll just have to see. We'll see if Powell really derails it tomorrow, or, being overseas, is he even going to really talk about things much. It may be a big, as they call a nothing burger, right? So we'll just have to see. But CPI, I think, is going to come in, show that continued downtrend. And I think the market's going to continue to run up into that. Unless there's just something that's not priced in. We know that if there's something that's not priced in, something that brings uncertainty, then everything changes. But right now, the certainty is just taking things to the upside.
The big change over 2022 was the Fed was all of a sudden, for the first time in 15 years, not afraid to become an enemy of the market.
Mm-hmm.
And that was really the first time, because every time before that, they'd had quick little, forays into being, hawkish, and then they'd very quickly pull back.
The
from
market
there
would
and
freak out and they turn
yeah,
around real
like
fast.
at the that little crash that we had at the end of 2018 was an experiment for Powell on how unpopular he could become in a very short period of time. Well, apparently he learned enough from that he's okay with it now, because the Fed got completely and totally embarrassed at the beginning of 22 because, oh, inflation's transitory, and like, okay, great job, guys, you know. So now they've doubled down on who they are and what they're willing to do, and they're under no circumstances. So if by at this point the market's used to them being hawkish, we assume them to be hawkish. We're not surprised when they're hawkish. So the downside surprises to their hawkishness, I think, will be somewhat more muted going forward. The big surprise will be anything where they're dovish. That will be an extreme move to the upside. So watch. I think at this point, the surprises could come to the upside.
Well, we saw that. That's part of what drove things last week. So I don't know if people were paying attention, but on Thursday, Bullard, who is typically the most hawkish Fed board member, spoke, and he actually was pretty dovish. And then the next morning, you had the jobs numbers came out and beat the estimates, and market was rallying off of that. But the number that the jobs number was lower than it was the month before overall. But what really did it was at 10 a.m. the ISM came out, and it was for the first time negative and below everything, and that really drove things higher because it's showing it's a big harbinger of a big time slowing economy, a recession, when the ISM goes negative. So that's what really drove things higher. And I think that, coupled with Bullard turning a little bit, I mean, for him, dovish, you know, giving even a hint that they could slow down or stop, for him is dovish. And so that was, kind of I think a surprise to the markets. And so that's kind of where we're at. I think, today, maybe the softness this afternoon, people taking some profits from the run up over the last 2 days. As we get into Powell tomorrow, Powell comes out and is, doesn't rock things, and we continue the trend. I think CPI again is going to continue that trend down. And that's kind of where we're at short term. But as we get down to the end of the month, we get to that Fed meeting, things are going to change, right? So remember, these moves on these daily chart moves, 7 to 10 trading days, right? So if we started last Friday, that's this week into early next week, and then this energy is going to be gone on the daily chart. The key will be, does that weekly chart kick in, right? And you had that on the screen before, and I think it's important to watch that weekly chart, because if that starts bleeding that energy out and continuing higher, then we've got ourselves a real good trend on our hand. Those can go 8 to 10 weeks. So
just again, so really, I mean, if there's one thing I could tell you: bullish above 4,000, bearish below 3,900. It's down to a 100-point range, and that is, again, the ES. It'll be slightly different on the SPX, but not amazingly so. So and I think that's kind of it for today. So never a dull moment.
Reveal it. Never. Yeah, right now it's revealing itself in a short term, going upward. So until it isn't, then that's the way you play it. Like for example, this morning on my strategy, the Target 100 strategy, I just went put side only. I'm going to let this thing run away from it, right? Selling the put side, and then if it changes, then I'll sell the call side, right? And again, watch those energy, right? The energy burns out, you get to one Bollinger Band where you're going to turn around and go the other way, then you sell there. You can play the swings really well in this type of market, because it's a trending market that's like this, right? Big moves. It's not a quiet, kind of just choppy, grinding market. It's harder to play the swings in that. Right now, it's really easy to play the swings of the Bollinger Bands and everything out there. So short term, that's kind of where we're at. And then watch that weekly chart to kind of reveal itself over the next few weeks into the end of the month for the longer term trend.
Okay. Well, thanks everybody for tuning in. Whether you're live with us or whether you are watching this on a replay. Again, my name's Doc Severson. I'm joined here with Dave Lukas of 12-Minute Trading, and we will see you, I think, next Tuesday. Is that right, Dave? We're going to do this next Tuesday,
because Monday's a market holiday again.
So market holiday. So we'll do this on Tuesday. And best of luck to you all. And please let us know if there's something you'd like us to include on the next session. Be happy to do that. All you have to do is to write us in at support@12minutetrading.com. Make sure to subscribe and we will see you on the next session. Thanks, everybody.
Thanks, everybody.
And there we go.